Good viewers, welcome to another episode of Financial Accounting Made Simple channel. Today, we are going to be looking at the cash flow. As we all know, for every business organization, they have to maintain the cash income and cash expenditures. For the cash flow, this is a summary of the receipt and payment of check and cash transactions that are held in any business organization. Today, we are going to look at the types of the cash book. The cash book has the single column cash book, It has the double column or two column cash book. Double column or two column. We have the three column cash book or the triple column cash book. And lastly, we have the petty cash book. But in this session, we are going to be looking at the single column cash book. But before we go into the calculation proper, let's look at each of these cash book one after the other. The single column cash book is a cash book that records the cash or bank account of any business organization. It records the check transaction or the cash transaction of any business, while the double column cash books combine the cash and bank accounts together to form the double column cash book. The three column cash book, in addition to the double column cash book, introduce the discount column, which makes it the three column cash book, which simply means in the three column cash book, we have the cash column, we have the bank column, and we have the discount column. In our previous videos, we've discussed about the type of discount we have and the discount that we make use of in the cash book, which is the discount allowed and the discount received. Also, we have the petty cash book that is used to record minor expenditure of any business organization. Looking at the single column cash book, we have the format of the single column cash book. The specimen have the column for dates, the column for particulars, the folio, the column for the amount on the debit side, which is the inflow side, while the credit side also have the column for date, particulars, folio, and amount, which is the outflow side. The debit side, which is the inflow side, records all cash or check that comes into the business, while the credit side records all cash or check payments made that is going outside the business organization. As you can see, in the single column cash book, we only have a column for amounts, not a column for cash or bank, only a column for amount. But one thing we should understand is, for this single column cash book, it can either be a transaction that is made on cash or check. You can see that we have a work in between the two, which is or. We cannot combine the two. Combining the two makes it a double column cash book. So it's going to record a transaction that is either made on cash or check. Let's quickly look at this question. We are asked to enter the following transaction in the cash account of Sarumi. Another thing we need to understand that the single column cash book can either represent the cash account of the business or a bank account of the business. So, following our business entity concept and complying with the concept, we have written on the book, in the book of Sarumi, which means we are reporting in the account of Sarumi. So we have a single column cash book. So this cash book starts from January 1st to January 21. Another thing we need to understand that in any of the cash book we mentioned above, it is only cash transaction or check transaction that can go to either of this cash book. Any other transaction that is carried out either on credit basis will be recorded in other tables like the subsidiary tables, like the sales table, purchase table that we have recorded in the previous lectures. Now, let's look at this question we have here. On 1st of January, Sanomi started business with 5,000 naira cash. On the 3rd of January, he purchased goods at 3,000 naira cash. He sold goods for cash for 4,000. He paid wages for cash at 3,000. He sold goods for cash at 1,000 and purchased goods for cash at 700. Also, on January 17, he paid cash 70 naira for electricity. On January 19, received cash from Tudor 2,610, and on January 21, bought stationery 1,110 naira for cash. Now, if you're hearing these accounts, we need to understand that all the money that comes into the business will be recorded on the debit side, which is our receipt side. And all the payments made out of the business will be recorded on the credit side, which is the payment side. So I do put on this side, the debit side to show the receipt and the credit side to show the payments. January 1. That is when the business started. And when you are starting a business with any amount, the amount input into that business is what we refer to as the capital. So starting a business with 5,000 naira cash simply means Sanomi is starting the business with the capital of 5,000 naira. So here we have capital as a new business that we are starting. So we're going to put it under the amount 5,000 naira. January 3rd, it purchased goods for 3,000. When goods have been purchased, it is going to be recorded on the payment side of our account. So we come to our days. January 3, we have purchases because goods were then purchased. So we have purchases. The amount is 3,000 naira. So we'll put it under the amount. The next transaction is January 4, sold goods for cash. When goods is being sold for cash, it means there's going to be an inflow into the business. So we come to our debit side, which is our receipt side, and record January 4. We write sales. Most of the mistakes that are done by our students is that when they are posting, they write all the details in the question in the particular column, which is totally wrong. We need to understand and identify which account and other account that is involved in this transaction. So in this particular transaction, we have the sales account and we have the cash account involved in this transaction. Those are the two parties of account in the transaction. So we are reporting sales under our particulars, under amount, which is 4,000 naira. January 7, paid wages for cash. Also, that is an outflow from the business. So we go to the payment side and write January 7, wages. That is what they paid for. We don't write paid wages. You write only the account that is involved. Wages, it is paid for cash, which is 3,000 naira. So we write it under the amount 3,000 naira. The next one is January 12 cash series. Now, this is the area where students, they find it difficult to interpret a question like this. When you see a question that says cash sales, it simply means sold goods for cash. It's a short form of what? Sold goods for cash. It simply means the sold goods for cash. We are making sales through cash. That's the meaning of cash sales. So that is a receipt to the business. So we come to the debit side and write January 12. January 12 sales under amount, which is how much? 1,000 naira. 1,000 naira. So the next question is January 15, cash purchases. It is the opposite of cash sales. It simply means purchase goods for cash or bought goods for cash. That is the full meaning of cash purchasing. Purchase goods for cash or bought goods for cash. And for the two parties of account involved in that transaction is the purchase account and the cash account. Mind you, this single column cash book is a replica to our cash account. So we are going to record purchases for cash on the credit side, which is the payment side. So we have January 15, purchases, 700. The next question is January 17, paid cash for electricity. We are also making payments, which is an outflow from the business. So we have January 17, cash is being paid. And the cash that is being paid is paid for what? Electricity. So we come under our particulars and put what? Electricity. Electricity, and the amount is 70 naira. So we move to the next question. In our next question, we receive cash from Tudor, 2,160. That is an inflow into the business. So we come here, we have January 19. Cash is being received from who? Tudor. So we write under particulars, Tudor. We receive a cash of 2,016 from Tudor. So we record here 2,610 naira. And the last question we have here is January 21, bought stationery, 110 naira for cash. So January 21, we have a transaction that involves cash and stationery. So under our particulars, once we use the cash flow, we record it here, which is stationery. And the amount is 110 naira. So this is the end of the question. Having done this, we posted both the inflows and the outflows. Having done with the posting, we need to add up both sides of our account to see which side is having the higher value and which side is having the lower value. By virtue of cash book are expected to have a debit balance, which will conform with the trial balance rule of all assets must be debited, because cash account is also an asset. So here, we add up what we have on our debit side, which is our receipt side. We have 5,000 plus 4,000, 9,000, plus 1,000, 10,000, plus 2,016. That is 10,000, that is 12,610 naira. And if we look at what we have on our credit side, 3,000 plus 3,000 equals 6,000, plus 700, 6,700, plus 70 naira, 6,770, plus 110, 6,880. So the difference between the two will be our balance carried down and our balance brought down. So in closing the account, we use the value with the highest value and make sure our closing is on the same line. It must be on the same line. Don't put one up and put the other one down. It's totally wrong, and you will be penalized for it under exam condition. So make sure the signs to close the account are on the same margin, the same line. So yet we have 12,610 naira, which is greater than the value we have here, which is 6,808 naira. So we use the higher value to close our account. And look for the difference on both sides. So the difference will be our balance carry down. So we have 12,610. 12,610 minus x 6,880. The difference is 5,730. So our balance carried down is 5,730. And for every balance carried down, there must also be a balance brought down. So we come to the debit side and put under our particulars balance brought down. And our balance brought down is 5,370. Including this, we have completed the preparation of our cash flow. But there are some situations whereby we might be asked to transfer to ledgers. So in transferring to ledgers, all we need to do is to pick each of these particulars and prepare ledgers for them. Which simply means, if we are preparing ledgers, we are going to prepare ledgers for capital account, for sales account, for to-do account, for purchase account, for wages account, for electricity account, and for stationery account. So let's quickly pass through the journal system. Let's enter the journal entry into the other side of our board. Now, preparing the ledger, one thing we need to understand is this, that if we have one account that occurs on different occasions, it occurs frequently, like the sales account appears here twice, purchase account appears here twice. We are only going to prepare just only one sales account and only one purchase account to record all events that are sales related. So in this case, I'm going to prepare the capital account. I'm going to prepare account for sales. I'm going to prepare account for purchases. I'm going to prepare account for to-do. I'm going to prepare electricity account. And I'm going to prepare wages account. And lastly, I'm going to prepare my stationery account. Now, what is the procedure in transferring all these accounts to the ledger? Items that you have on the debit side of your cash book will be posted to the credit side in your respective ledger account. This is to complete the double entry system of this transaction. So items that you have on the debit entry, on the debit side of your cash book will be posted to the credit side of your respective ledger. While items that you have on the credit side of your cash book will be posted to the respective debit side of your ledger account. So let's start with capital account. So we have capital account, debits, credits, naira sign. So we have general reward on the debit side. And to follow the accounting procedure, we are sending this to the credit side of the capital account. So we have general first. We have cash book or cash. That is 5,000 naira. Under the particulars there, I can either write cash account or cash book CB. That is a source where this account is coming from. So the next one is my sales account. So I include my credit and my debit and my naira sign. So after putting my currency sign, I had January 4, cash, 4,000 naira. And I have another transaction on sales, which is January 12, cash, 1,000 naira. The next one is the pseudo account. Pseudo account. So I have January 19, cash, 2,610. 2,610. And the next one is my purchase account. Purchase or purchases account. Purchases account or purchase account. So for purchases account, I have January 3rd. Mind you, my purchase account is on the credit side, which is my payment side. So I'm going to take everything I have on my payment side, which is the credit side, to the debit side of the respective ledger. So I have January 3. January 3, cash, 3,000 naira. And I have wages. Wages account. Wages account. I have January 7. Cash, 3,000 naira. 3,000 naira. And the next one is purchases again. So I haven't have one purchase account here. I don't need to open another purchase account. The one thing I just have to do is to bring that transaction under this purchase account. So I have January 15, cash, 700 naira. And the next one is electricity account. Electricity account. Don't forget to add your debit and credit term and your Vera sign, which is a foreign sign. So electricity is at 70 naira. So I have January 17, cash, 70 naira. And the last of it is the stationery account. The stationery account. The stationery account. So I have January 21, cash, 110. By doing this, you have completed the double entry system of these transactions. So the balance in the cash book will remain as a cash book balance. In case you are to transfer to the trial balance and prepare a trial balance, all you need to do is to balance off all these accounts. And wherever you have your balance run down, it is what you are taking to your trial balance. And you include in your trial balance the cash account. The value for the cash account will be this value. That is what you'll be taking to the trial balance. But when we get to trial balance, we explain more on how to balance off account and transfer to the trial balance. Thank you for listening. I believe we have gathered more information on cash book. See you in the next episode.